organized by Fintech Convergence Council and Payments Council of India of Internet and Mobile Association of India and National Payments Corporation of India. The fest is presented by Minister of Electronics and Information Technology, Government of India and Reserve Bank of India and supported by Niti Aayog, Startup India and Invest India. We welcome all of you for the panel discussion on reimagining trade finance with data and technology. But before we start, we would like to thank our sponsors, investment partner Venture Catalysts, agenda partner PayPoint India, silver partners Dubai International Financial Center, Jakarta CRIF, and bronze partners Swiss Business Hub India, Bayana Network, and Grow Capital. To start the discussion, let me welcome our moderator, Mr. Rakesh, Country Head, Sales, Global Trade and Receivables, Finance, HSBC India, Mr. Vinay, Global Head, Product and Structuring, Trade and Receivables Finance, HSBC, Mr. Vipul, Co-founder Big Basket, Mr. Stuart, Financial Services Lead, Palantir Technologies, Mr. Sandeep, CFO, Crompton Reeves, Consumer Electricals. Over to you, Rakesh.
Thanks, Srishti. Good afternoon, everyone. Indian supply chains are transforming in different ways and across levels. Products are being sold as subscriptions, say from buying audio series to streaming, to software as a service, or even banking as a service. E-commerce, or online to offline, has accelerated the pace of change, or I would say, has been a savior during COVID times. All of this is generating tremendous amount of data. We are here today to talk about the opportunities that are ahead of us using this data in creating a sustainable trade finance ecosystems, enabling resilience and sustenance to the larger ecosystems at play. We are also going to talk about challenges that we need to collectively overcome in this journey. I have with me an extremely diverse and deeply experienced set of panelists to talk about and to learn from them this afternoon. Thank you, gentlemen, for joining us today. And thank you, Vinay and Stuart, for joining in the VRs this morning. Let me start with Vipul. Vipul, Big Basket has changed behaviors for a lot of us. It has definitely changed my behavior in the last 18 months. I like your smart basket. It displays exactly what's needed. Let's start with hearing from you as to what problem statements did you set out to solve for when you began the Big Basket journey, and what's been the role of tech and data in this journey?
Thanks, Rakesh. Happy to speak. Let me maybe set the context in terms of what Big Basket does very briefly, and then I'll talk about what we've really tried to achieve as part of our data collection, data usage goals. If you look at Big Basket today, we are one of the largest grocery retailers in the country. While we are online, we do about 500,000 orders a day. We are the third largest grocery retailer in India today. And necessarily, grocery is such a complex category that you have multiple suppliers, you have multiple distribution centers, you have complex supply chains because things need to be delivered fast. You're dealing with perishable goods, you're dealing with fast-moving consumer goods, you're dealing with food products, non-food. So today, for example, we have close to about 60,000 suppliers, 60,000 unique suppliers who supply to us. At any point in time, our distribution centers, the large ones, carry 50 to 60,000 unique SKUs in stock, which are available at that point in time. We may list maybe 100,000, 150,000, but at any point in time, about 50, 60,000 are actively available and are being delivered to customers. And all of this happens in a same-day basis, sometimes in 2 to 3 hours. And therefore, necessarily, the supply chain is very complex. So it starts from collection centers in farm areas to processing centers for staples, and all of it converges onto distribution centers in large cities, and then goes down to dark stores, and from dark stores, it gets delivered to customers. So therefore, one of the key things that we really started to solve for when we realized that the only way you can manage a supply chain like this intelligently is by using tech and using data very intensively and sort of building it into the process itself. So there are three things that we have tried to achieve. We have tried to achieve, one, making sure that data is available, that real-time data is available at every point, at every touch point in the entire supply chain. So that was the first thing that we tried to achieve. The second thing, and we realized this was very hard, is to make sure the data integrity is very, very high. it's very easy for data to get corrupted. In our kind of situation where customers are ordering online and I'm showing them a catalog, I can't afford to have a customer place an order for something which we don't have, or show or not have something which we have, and for to lose that business. So therefore, data accuracy, data integrity becomes extremely important. So that's the second thing that we have really tried to achieve. And the third is to build a data culture, a data literacy right to the organization. And I'll talk briefly about what we have done in each of these cases. In the case of data availability, what we have really tried to do is to look at each of our processes and digitize them. So let me give you a simple example. For example, one of the biggest pain points we realize is because we have 50,000 SKUs and you need to pick them when a customer places an order, and each order is, let's say, 30 different items. How do you make sure that this happens very efficiently, this happens very accurately, and that you know what has been picked? Right? So therefore, knowing exactly what inventory is available is the first thing. So how do you ensure that the inventory on the shelf is completely accurate? So therefore, there are two things that we do. We use barcode scanners at every ingress point, so that when the products come in, everything is barcoded, moves on to the shelves, and every time a product is picked, again there's a barcode which comes into play. So at any point in time, we know which SKU is moved to the shelf or is moved from a shelf. The second thing we do is the pickers, because you can't train somebody who's just passed out from, let's say, school, and expect him to know what's the different color of orange juice or a different brand or different size that he has to pick, and what's the difference between a large onion and a small onion, right? So you can't have that intelligence or you can't build that capability and skill in the process. So therefore, the process has to take care of being able to ensure that the right data is available. So therefore, what we do is the system generates a pick list, and the pick list is automatically is ordered in terms of the route that the person has to take in the warehouse. So therefore, the data, the plan, the SKU plan in the warehouse itself. So the system knows where every SKU is sitting in the warehouse. So his route gets ordered. The guy uses a machine to pick. So there's a handheld scanner that he uses to pick. It tells him which shelf he has to go to, which number, what is the number of the shelf on that particular column or that particular row. So he goes there, he scans it. And the system, what it does to make sure that we don't have errors, is that it doesn't show him, it shows only one SKU at a time. So the picker doesn't know what is the next SKU. So he doesn't start picking multiple items, starts trying to put everything together, jumps the queue. He's not allowed to jump the queue. So the moment he picks the item, he scans it, the system registers saying, okay, pick. It tells him how many quantities are to pick, and he has to scan every one of them, and it goes in the basket. So and they're picking multiple items at a time, multiple orders at a time. So it's not that, just one single order. You could be picking 3 orders at a time, each of 20 items. So 60 items. The system will plot the route, make sure that he reaches this right shelf, ensure that he picks only the correct item. So this ensures that your data integrity is very, very high. So therefore, building this process, now therefore, every time an order comes to the warehouse, every time a SKU moves to the shelf, we know, okay, this SKU is on the shelf. Every time it moves out, he scans, we know if the SKU has gone off the shelf. Every time it enters a van, we know if the SKU has entered the van. So at any point in time, we are collecting data at every stage of the process. So now you have data available. You also know by picker now, this picker picked so many items, this picker made this mistake, this picker took the wrong route, this picker, the average productivity is so much. So it allows you to use the data to start becoming more predictive and more efficient. You start figuring out where the errors are, you start figuring out what things are you making mistakes on, and that creates better process design, better data availability, and better data integrity. And this is an iterative process. So therefore the result of all this, what really happens is today, for example, our pick accuracy is about 99.9%. We never make a mistake in picking an order. So which is why our auto fill rate when we deliver to customers runs at 99.6, 99.7%. What it means is if a customer orders 100 items on an average across 500,000 orders a day, we'll deliver 99.7% of those, on 99.7 items. So that's the accuracy that we've built the process to. And this is as good as it gets anywhere in the world. And we benchmark with some of the largest retailers in the world, including Amazon, including Alibaba, including Ocado. And that's the beauty of process design. If you can build a process which is robust, you collect data systematically, and you ensure the data integrity is very high, you can actually do a lot with the data. The third part is data literacy. So way back in 2014, we set up a data function, and which is now I think about 25 people strong, headed by a CDO. And the job of this function was really to make sure we have this millions of data points coming through. How do we use them intelligently? How do we create dashboards? How do we get people to start using it? And one of the first things we did was we started creating user-friendly dashboards, and then we made it mandatory for people to actually use them. So the system would actually log, and you had to log in every time, and it would actually tell you, okay, this person did not use it, or this person did not see the daily sales report, or this person, and depending on your role, there's a set of reports that you're supposed to look at it every day. So for example, you're a buying guy, you should know what your stock levels are, how much sales have happened for your category, what kind of supplier fill rates have happened, what's your biggest stock out, which is the SKU which should be is probably in danger of running low. All this data is available real time, and if you don't look at it, you are going to make a poor decision. So therefore, the system forces. So we log it, and it auto generates a mail saying, and to his supervisor, and to him saying that you should have probably looked at all these reports. And we did that over a period of time, but now we stopped this about 3 years back because it became redundant. Everybody uses data now, and people realize that if you don't have the data, you just can't even communicate with anybody else. So it becomes very hard. So we built that data culture over a period of time. So the focus, therefore, has been to get these three things right: have data available in real time, make sure that the integrity is very high, and make sure that people use it.
Thank you, Vipul. I have to say, my few reactions. One, I couldn't have expected a better warm up to this conversation. My second reaction was that I always used only Google Maps to go from point A to point B. Didn't know you could make it as simple in your warehouse. And actually, the third question that comes to my mind, which I'm going to ask you another time, another day, is why have humans pick it up if you've made it that straight, simple? But I'm sure that's something near along in the process. And there's a lot for us to learn from what I've heard from you from a banking perspective, from where I'm sitting and seeing this as well. But thanks, Vipul, for setting the context. Let me just quickly move to you, Sandeep. And a similar question, but from your context, your background, your experiences, how has tech and data played a role in changing in how you do businesses in your space?
Sure. Good afternoon. Good afternoon, Rakesh, and to all the fellow panelists. Really privileged to be part of this discussion. Being a finance person, one has historically been used to dealing with huge volumes of data. But as things have progressed, and at the back end, ERPs have taken care of basic data that the organization needs. The focus in Crompton, and we are India's largest manufacturer of fans and pumps and a lot of consumer electricals. In our case, the challenges has been on two fronts. I mean, the way we looked at data. One was, how do you convert data into information, and then from information into actionable insights? So that remains the focus internally. All the data that your systems churn out, how do you use that, convert to information and then into actionable insights? But the opportunity that has come, and something that we leveraged in Crompton, particularly last year, starting with COVID, was how do you merge external data? You have a lot of data internal, which is which is all verified data coming from your own system. But how do you merge that with externally available data and use that as a form of competitive advantage? And there is one very, very clear competitive advantage that we leveraged last year, was at the time when the country went into lockdown in April, May, June. We started tracking districts which were most severely impacted by COVID, and therefore they were shut, or micro markets that were shut. We classified them as red. There were some micro markets that were open partially, and they were classified amber, and then there were markets that were fully open, green. So we used that red, amber, green to divide the whole country into districts and micro markets. And we were therefore able to focus all our resources on the green and the amber markets, and make sure that we were best placed to take care of consumer demand. Because actually what happened last year was that demand was intact. It was the supply that got disrupted. So we used that data, merged it with our internal systems, and therefore we were able to best leverage all markets which were green, those which were amber, and best prepared by looking at leading indicators to anticipate which markets are now going to become amber and which are going to become green, and therefore ensure that all our resources were diverted to those markets. So I think for us, the biggest opportunity that has come has been to use technology to merge internal, obviously verified data with external data, and use that to convert it to information and thereafter into actionable insights. Thank you.
No, thanks, Sandeep. Clearly, we can see tech and data are disruptors and enablers, and are industry agnostic from this conversation. Let me move to you, Stuart. Palantir is setting new benchmarks. It is doing phenomenal work in helping corporates and banks understand the power of data. Right? Can you share how you're looking at this evolution?
Yeah, certainly, and great to be here today, and thank you for the invite. For me, you need to take a step back and look at the current crisis that's going on in the economy. So there's a pandemic, there's Brexit, there's lots of environmental regulation, there's the Suez Canal being blocked, and they all put huge pressure on our global supply chains. And what you see is, at a macro level, you see inflation, you see labour shortages, material shortages, increasing costs. There is probably more pressure on supply than there ever has been. I know in the UK right now, I can't get any petrol, so I have to take a 2-mile walk to the train station to get to work. It's really having an impact on a human level. But in Palantir, what we are able to fix is phenomenal. And most recently, I'll give you 2 examples of one in manufacturing, where typically in response to inflation and increased costs, manufacturers try and increase their prices. But at a granular level, manufacturers sometimes don't understand how much each unit of production costs to produce. If there's 100,000 items, they just don't know the impact of inflation at that minor level. So you sometimes get bad pricing strategies. What we can do at Palantir is we can quickly allocate costs and margin from the large aggregations down to the SKU and item level, which really allows the manufacturer to understand inflation and the impact of inflation and margin at that item level. Another example that we're doing, which is super cool actually, is within hospitals. Currently there is an increased demand for elective surgical procedures. But what's happening is that the mix of procedures doesn't follow historical demand patterns. So hospitals don't have the right materials, resources, people to perform operations. But with Palantir technology, we can accurately forecast that demand and ensure the right materials, machines, and people are in each hospital, and the underlying supply chains have the right demand forecast patterns. So it goes all the way through the supply chain. So in conclusion, Rakesh, what we can see is that we can all leverage technology better to build clearer insights into supply chains and enable SMEs to prepare for and react to sudden shocks better. Data is really the core of this, and what we can do in Palantir is we can build digital twins of supply chains which allow us to respond super quickly.
All right, thanks, Stuart. We'll have a few probing questions for you and won't let you off easily. Segueing into financial services and banks, Vinay, my questions to you. Accelerating and enabling trade is at the core of HSBC, right? With the advent of data and tech, how are banks and how is HSBC innovating and reinventing itself to be an enabler in this journey?
Good afternoon, all. So thanks, Rakesh. I'm going to answer that probably giving 4 examples of very tangibly how technology has been leveraged to kind of help both trade and trade finance. So the first is, as many of you know, trade finance has not really changed a lot over centuries almost, and the use of digital channels has been very poor. Kind of aided by, the pandemic, as well as investments in more digital capabilities, we've seen our customers communicate and transact and instruct us more digitally than ever before, and significantly. So where barely 20-25% of our communication was happening digitally, it's now crossed 80%. So that's the first, which you could almost say is hygiene and kind of catching up to where other industries have been for a while. The second is we're using the data that we get across the transactions we see with our customers, with their counterparties, to create analytical tools. And one example is the global social network analytics tool that we put in place that helps us automate very cumbersome and difficult processes like money laundering controls and money laundering tools, and give some of those actionable insights that our panelists talked about, which help us turn transactions around faster and improve our SLAs, for our clients. But again, this is more internal to the bank. I do want to talk more about the industry. Like you said, we're the largest trade bank, and being across our global network, our customers often raise this to us that the ships move faster than the documents do, and that the pace at which we give trade finance is slowing down trade. So we have made significant investments with our other collaborative banks and a group of banks who come together to create solutions where we've got digital letters of credit, electronic bills of lading, working with shipping companies, using technologies like distributed ledger tech to reduce the time that it could take an exporter, for example, to be paid from 5 to 10 days to down to a few hours. So we're really helping that accelerates and drives the velocity of trade. That's the third. But the fourth and the final one, which I really think we should be spending all our time talking about really is in this data session, is how customers' business models are changing and how we're looking to support not just our client, but their end customers and their suppliers. So either they're trading more through sales portals or platforms or marketplaces. So we're being asked to offer our financing solutions onto that. But also what the pandemic and some of the disruptions that were referred to has seen a slight, I wouldn't say reversing, but a change in trend from just-in-time inventory stacking to what we're calling just-in-case inventory stacking. And you're seeing higher levels of inventory and assets built up to take care of disruptions. But using data, we're trying to see if we can finance that. So the core needs are three really that we see is, can we give financing earlier to the suppliers of our clients than we normally do? Can we extend payment terms to their buyers? We have to do that on digital platforms, like I said, and we have to do that almost in real time. So for us, the biggest evolution, I would say, in banking and trade finance is moving away from poring over historic financial statements to looking at the data of historic performance of buyers, suppliers, and merging that, like was said, with live data from shipping feeds, putting them together, getting the APIs and systems to pull that data out, and with digital scorecards and models spit out either an approval, a rejection, or a referral to a human almost in real time. And we're pleased to say we made some good progress around that by embedding ourselves in different platforms to offer this level of financing to specifically to SME suppliers. But that is one of the biggest kind of transformations, Rakesh, that we see and we're really excited about.
Well, thanks, Vinay, and thanks for helping us navigate to the problem statements and future forward. And therefore, I'll come back to you, Vipul, once again, and not limiting to Big Basket, but industry in general, retail or any other industry which you think are ancillaries where this makes an impact. There are still various gaps in terms of access to credit in the ecosystem, right? You're looking at a large ecosystem. You talked about that. How can tech help deliver on some of these problem statements, and what is required either from industry, which is where, say, you're coming from, or from participants or enablers like banks and tech companies to bridge some of these gaps?
Right. So one of the things we realized, when we started selling to large B2B customers and we needed to give them credit, we realized it became very hard because you had to go through the financial statements, figure out how they were doing. Then you would look at their payment track record, and then over a period of time, you would form an opinion, then give them a credit limit, and the guy would flout the credit limit or would not pay in time, and then again you had to revise it. And this was taking a lot of time. On the supplier side, we practically ignored them. I mean, so we said, you figure out your problems in life. This is my credit period. This is what we'll do. And about a couple of years back, we said, this can't be. We can't take a laissez-faire approach to, vendor management, because this is something which we need to manage very actively if we need them to be productive, if we need them to work with us and scale up. So therefore, we started building, and we are pretty close to now launching it, a vendor dashboard, which essentially integrates multiple things. One, it integrates all the vendor transactions. So therefore, the vendor can actually log in and see all the invoices that he's delivered to Big Basket, what has been paid for, what has been the average payment period, what value have we bought over a period of time. So he can reconcile, what is outstanding, what the issues are, what credit notes are sitting there, what debit notes are sitting there, what needs to be reconciled. All of that is visible seamlessly. He doesn't have to do anything for it. The second thing we said we will integrate that is use the data that we have. Now, most of these vendors, we are working for 5 to 7 years. So we have plenty of data. So we went back and said, let's take all this data and use the system to actually create a credit score for each supplier. So there is now a credit score for each supplier, which the system uses now to generate a credit limit. So every vendor now has a system designed, customized credit limit based on their volume of sale, based on their payment track record, based on what the terms we have with them, and it's unique to them, right? So now, up to the credit limit, the supplier has two options. He can actually, defer payment, and we have a standard interest rate defined, let's say 2% a month for a minute. And if he wants 15 days, he takes a 1% discount and gets paid immediately. All he has to do is log in the system saying, I want these invoices to be paid, and this is that period that I want to be paid in. System will calculate, process a note to finance, and finance, tees up the payment. So therefore, it becomes automatic. He doesn't have to call anybody. One of the biggest things we wanted to avoid is that there is a huge amount of interaction between suppliers and finance. Our goal is there should be 0 calls between suppliers and finance, because it's just unproductive, and all of it is data. Finally, that's all that they're asking for, and transparency, and that can be available to the system. So now the system starts calculating credit scores, assigning credit limits. The second step that we are doing now is to make sure that we have APIs built into this, and we can bring in external financiers onto the platform. So this will become almost like a lending marketplace. I may offer 1% for every 15 days or 2% a month. Somebody else may be happy to give it at 1% a month. And so therefore there can be multiple financiers on the platform who will be willing to lend. It could be BigBasket, it could be another bank tomorrow, it could be a fintech, it could be an NBFC, and the supplier decides who he goes with. And he has multiple choices. He can decide which one suits best for him, and he can go with that. So therefore, opening up the API, opening up the platform where a supplier therefore has access to each of these different things. The third thing we are doing is to customize this for different types of suppliers. For example, we have some very unique suppliers. We have captive suppliers who just build our private label products, or reprocess who do only work for us. So therefore, the kind of the treatment that we need to give them, the kind of products that we need to create for them are very different from what we have for a normal vendor. Or for example, farmers, where we actually we pay them next day. So there's no credit. So the guy doesn't have to worry about credit, but he may need to borrow money for seed when at harvest time, or at seeding time. He needs to buy implements, or he needs to buy seeds. He needs to borrow money. How do we make sure that we give him a limit which is commensurate with what his output is, and also helps him actually increase his produce? So working with that, so creating very customized products for certain constituencies of suppliers. On the B2B customer side, one of the things that we're doing now is we're doing a standard BNPL integration, buy now, pay later, where they can decide, and this is very granular. You can say, okay, I'll pay in 10 days, 12 days, 15 days, 16 days, 18 days, and automatic system calculates what the cost is, charges him, and he gets that credit limit. Again, the credit limit works seamlessly. So this is where we are heading in terms of making it seamless for vendors to access credit and also know what's happening to their payments.
Thank you, Vipul. And probably you've summarized it for everyone. Sandeep, let me actually move away from the problem statement to the solution statement, actually. Considering a lot of the problem statements that Vipul's articulated would, to some degree, extend into other businesses as well. What do you think, Sandeep, from your lens, looking at the problem statements that either Vipul's articulated, what you see in your space, how can data solve that problem? And what do banks and ecosystems need to do to solve these problem statements?
Yeah, sure. No, I think Vipul's summed it up quite well. And I think at least from my lens, the way I look at it is that this whole ecosystem that exists, which is the company, the channel partner on one side, the vendor on one side, a lot of companies have done a lot of work to connect with their direct channel partners. or one level below, companies have gone. We all have invested in technology to connect with a channel partner or to connect with a vendor. But I think the problem is that data A is siloized, and it's significant. So, and in some sense, still very private. So if I do, just to take the example that Vipul was saying, we also have a system of early payment to our vendors, and we've tied up with a third party to provide that platform. But unfortunately, that does not help us because there's a very long chain in the supply chain. Now, if a vendor of the vendor or if a sub vendor is having any financial difficulty, there is no way I'll come to know of it. But I will suffer in case that sub vendor is out of cash. So if using technology, this whole process could be disintermediated and data could move seamlessly across all the stakeholders, then that will certainly create efficiency. And in that, I think everybody has a role to play. Obviously, we on our own are not going to develop any technology which will cross the various channel partners that we have, be it on the vendor side or be it on the distribution side. So obviously you need a technology company to be able to find this idea or develop that product that can cut across these silos. But obviously they are not going to do it unless there is a way to make money. And that's where the banks come in, because that's the only way you can monetize technology. If you have a way of using it to kind of lubricate the entire system and make money move faster and cheaper to whoever needs it. Obviously, regulators have a big role. I mean, one of the reasons why everything is still largely paper-driven in banking is because of regulation. I think left to banks and corporates, we are all happy to do things digitally, but everybody wants some KYC or some paper. So that's where the regulator comes in, and in the end you need a customer to pay for all of that, and that's where corporates come in. So we've seen a couple of examples of this combination, and if that combination hits the sweet spot, and I'll just take 1 minute to give an example. All our collections were all electronic. But the process was that the customer will, wire the money, and then somebody at the back end in the finance will figure out which invoices has the customer paid, knock them off, clean up the customer's books so that his account is clean, and then you can resume invoicing to that customer. And then we found a technology solution which basically puts the customer ledger in the hand of the customer. He can see all his account statement with Crompton, which is not very high tech, but the beauty was that it was integrated with his bank accounts. So the customer could select the invoices that he wants to pay. As an added advantage companies have, we have cash discounts if you pay early. So he could get to see if you pay this invoice, you get a 0.5% extra cash discount. And then it is integrated with all his modes of payment. Could be overdraft, could be current account, could be channel finance account. And he can schedule his payment. He doesn't have to pay immediately. So he can schedule it for 2 days later. The data comes to our ERP, automatically invoices get matched. So human interface gone, full power in the hands of the channel partner, time, efficiency, money, everything saved. And that would not have been possible unless all four stakeholders, which is the technology company, the bank, the regulator, and the company, found something in it for them. And I think that is what is required to break this siloized challenge that we see today. Yeah.
Thank you, Sandeep. Thanks, Satan. Actually, we've touched upon quite a few things. We've talked about data silos. We've touched upon deep tier financing, the ecosystem financing. Vinay earlier spoke about financing channel across sides. We've talked about the role of regulator. Vinay, if I were to come to you and help us envision the path to a utopian end state, right? As to what is needed to get there, and what do all of us on this call and outside of this call collectively need to do in terms of real tangible steps in that direction?
Sure. So I think, like we've seen, a lot of good steps are being taken, but I completely agree with Sandeep's point to move this from few innovative ideas to actually at scale, having the right regulatory framework around how data is shared, especially across borders, because we have seen trends of data nationalism. How data can be accessed and shared is really very important. The second is standards around that data, standard formats, how data can be used and structure is very important. But also not just data in its static sense, but how transactions can be regulated under things like the model law for electronic transferable records, right? MLETR. It's very important that we move away from, any paper modes, etc., and move to where you could have, for example, an electronic negotiables instrument rather than a paper-based instrument. That in itself will accelerate data. So for one, I would say that is very important. The second thing is we've talked about fantastically about decisions and data scoring, which is great, where we're moving away from, looking at old historic financial cash flows, we're looking at live performance history of a supplier, and we can give financing earlier to them or against assets. However, one area still remains a major challenge, and that is about how easy it is to onboard an SME supplier into the banking infrastructure. The customer due diligence is onerous, it's paper-based, and it also changes based on different regulatory frameworks. Some kind of a digital identity, Rakesh, that is portable across countries where there is live real-time information of the SMEs, businesses, due diligence would be massively helpful and reduce that cost of them onboarding and that barrier for them getting onboarded into the financial system. And that is going to really drive financial inclusion in a big way. So for me, I mean, these are the aspects of a regulatory framework and also getting a digital identity. The digital identity are really, really important. I think we'll then come to the vision, like you said, is really I am a counterparty on any platform buying or selling. Like we just saw, as I'm checking out of my basket, I have the ability to get a BNPL extended terms and a decision turned out in almost real time. That for me is really the utopia, right? Where I can get digitally onboarded immediately, and then I have the real time credit decisioning in place. But quite a few things have to come in place for that to happen still, Rakesh. But we are in the right direction.
Thanks, Vinay. And Stuart, if I'll come to you on the next question on related, taking from what Vinay has mentioned, but India, given partly the regulations, whether we talk about the India stack or some of the changes in local regulations and nuances that are happening, for example, the recent regulation on account aggregator, somewhere does give greater control, visibility in terms of high quality sanitized data still owned by the owner of the data. Same question to you, Stuart, as I asked to Vinay. But one flip in the question is a lot of this is positive about data, but there's a lot of conversation about who really owns the data as well. So while you paint the picture of what the future and what someone like a Palantir can play a role together with others in this journey, but also if you could talk about the dangers and how do we counterbalance it?
Yeah, sure. So I agree with everything Vinay just mentioned. Actually, in terms of Palantir, we think about the future as democratizing data. So how do you remove process, governance, legacy tech to benefit, to enable speed and velocity of data-led solutions? So to me, it's really about democratizing data. We talk a lot about our vision is to amplify human data-based decisions to unlock human potential. There's so much more we can do if we are able to increase human data-based decisions. Now, the point you made earlier is super interesting, right? And the way that we have solved this, or the way that we've seen it being solved, is actually by creating a truly trusted ecosystem, where actually you have to trust that the ecosystem uses the data in the right way, safely and responsibly. We did some work with the NHS, where the ecosystem included the NHS, universities, governments, manufacturers, consultancies, software providers, and we all managed to share the data responsibly and safely. The outcome was that there were ventilators in hospitals and there were vaccines in arms. But the key point here is that it has to be safely and responsibly shared. But that involves an ecosystem that has trust and openness and collaboration at the very heart of it. That, for me, is the future of how we get the best out of data.
Thank you, Stuart. I guess we can sneak in one last question, and this is to anyone who wants to pick this up, is how do we come together and work in real senses? I know there are a bunch of proof of concepts that are happening in the market in India locally. Vipul, you talked about stuff. Sandeep, you talked about stuff. If you had one wish list of banks and financial services, maybe this question, if I direct to Sandeep and Vipul, what would that wish list be?
I think if I take it first, I think the most important thing is to facilitate ease of doing business. I know it's a buzzword that we speak about, and we have to keep in mind that whatever technology we develop can't be so complicated that the common guy doesn't understand, can't adopt it. Secondly, it should be mobile friendly. Because that's, I think, the platform which most people use. And finally, it should address his concerns about data confidentiality. And last one, it should address whatever every user will have, what's in it for me. So there must be a cost and benefit trade-off. So it's slightly 30,000 feet, but I think unless you address these points, any technology intervention that we do will probably not be scaled up.
The only thing I would like to add is, while we'll build the last mile, so to speak, which is really from the company to the vendors, suppliers, and customers, I think the first mile, which is really company to financial intermediary or a bank or a fintech, is where I think there's not much work happening. And there's that is still a very non-digitized, very offline, very broken. And if that gets digitized, this entire chain can be very, very seamless and can really become very powerful.
Thank you, Vipul. Question to you, Vinay. There's a big debate between disintermediation and collaboration, right? Where is the fine line?
No, I think what we compete on and what we collaborate on is definitely getting refined. So certainly we see that, with if you see some of the initiatives we've done around digitizing trade, it is actually working with many of our competitor banks. For example, Contour on digital letters of credit, or Trade Information Network around open account trade, etc. Because we do believe, to the points being made, we need to collaborate not just with the banks, but with the ecosystem players, which is the shipping companies, logistics players, and the regulators, customs and ports. And we're seeing this in different markets. We are reaching to that point of collaboration. I think we are working with fintechs. I would like to say that, maybe 5 to 7 years ago, it was a kind of an either or situation. I think today, it's a far more collaborative working model rather than one of disintermediation, where they do require banks in order to kind of, augment the balance sheet, to come in with some of the risk controls, etc., that are in place. And banks definitely need the fintechs, Rakesh, for the nimbleness of the technologies and the, boutique techs like AI, etc., that they bring to the table. So we see it as a far more collaborative approach. And I think, at HSBC, certainly we're very much in what we call a co-creation mode, not just with our corporates or the shipping companies, but often with the fintechs that power their sales platforms, their e-commerce platforms. And we've done some of these ventures where we work with bank, fintech, corporate, and, sometimes customs, ports as well, to make a kind of a use case work. So I certainly see this is going very much in the direction of collaboration. And then you compete on other things with your peer banks on things like pricing, on the level of your service, etc. But that's how we see this trending.
Can't agree more with you, Vinay. I think we can't be ostriches in this environment, and totally aligned with what you're saying. Stuart, any last words from you?
Yeah, I'd agree. I think when we look at things like banking as a service, embedded finance, it all relies on an ecosystem. It relies on collaboration, and it relies on software being built in an interoperable manner. Long gone are the days of banks and consumers buying enterprise-wide solutions. They want the best of breed, which means interoperability. That's how software needs to be built in the future.
Thanks, Stuart. Thank you, gentlemen, for an extremely engaging conversation. I would simply say the journey has just begun, and the solution cannot be found in isolation. So thanks a ton, and have a great rest of the day.
Thank you.
Thank you. Thank you so much.
Thank you, everyone, for such a wonderful conversation. Thank you to all our speakers. Thank you all the delegates for attending and being there for 3 days in the Global FinTech Quest.